Eric,
Pete,
what the fuck do you want?
you need a hug, man.
Oh, fuck, man. Danny, we should make shows after Real Bedford games.
I did think that while we were watching it. I was like, "This is you're gonna have to do some heavy lifting here."
Well,
Eric.
I like walking in and I'm all like, I'm walking over here. I'm like imagining, all the lads are going to be together watching the game. And I walk in and everybody's faces are on the floor. And I'm like, oh, shit.
Danny, you might have to do most of the work here, dude.
That's okay.
For people listening, watching, we just watched the Real Bedford game. We just lost. It's our third defeat in the league against a team we should have beat. It hurts, man. Honestly, no football ever hurts as much as when this team loses. I take it so personally.
I couldn't imagine.
I got divorced, and each defeat is worse than the divorce. I'm telling you, I felt shit when I got divorced. I feel worse. I feel so crap. I feel like genuinely like, fuck this, fuck New York, fuck Danny, fuck Jeremy, fuck you, Eric.
You made me not as scared to get divorced now.
Oh, man, honestly.
You gotta get married first.
Yeah.
It's so weird, right? It's so exciting to buy this team and think we might win the league and go on this adventure. Do you have like an NFL team?
Yeah, Denver Broncos.
Yeah, so you used to support a team that sucks. I'm only joking. I don't know if they suck.
Oh, it's horrible, man. Russell Wilson has been a nightmare.
Well, like, so
coach.
I grew up supporting Liverpool, right? And like, we have some defeats and it's shit, and then like, it's whatever, you get on. But this is like, it's like someone goes and puts a knife in me and they turn, they drag it through me, and then they point and laugh.
You're like going to bed every night, like, oh, the game tomorrow, it's going to be great.
Yeah, can't wait. And now it's like, well, this fucking sucks. I hate this. Anyway.
So should you buy your hometown team?
Oh, man, I tell you what. You got to get some thick skin to deal with this stuff because it has so much more meaning, right?
Right, totally.
It's like, before it's like I wanted my team to win. I'll tell you something interesting, right? When England were in the Euros, by the way, people listening right now are going to be like, what the fuck are you not talking about Bitcoin? When England were in the Euros, right? I followed England in Euros, the World Cups, and they've always gone out. It's always been really miserable. Yeah. And in the Euros, we got to the final, and I went to it. And when we lost, I was kind of like, okay. I was like, oh, we lost. And I think what it was, I had this realization afterwards. I was like, well, if we'd have won the final, what did it actually mean?
Yeah.
Like, what does it mean? Yes, you won, but what does it mean? When I leave, what does it mean?
Right.
It doesn't mean anything.
Right.
But when you go out in like the semis or the quarters, it does mean something because it means you miss that next game.
Yeah.
Once you get like the journey, I realize it's all about the journey and staying in. Mm-hmm. And of course you want to win. But this isn't about the journey's fine. It's about the winning. It's like, this is my home team. This is my hometown. I want my hometown to have something successful. And fuck the journey. It's just like, we got to win.
Right. And you effectively have like a budget built out in your mind of like the long term, we need to hit these wins to get to this place.
Yeah.
And every single time you fall short of that, it's like, oh shit.
Yeah. And like, we were in a good position. We win tonight. We're 9 points clear. It's like 9 points clear, 13 games to go. This is good. Mm-hmm. Now it's 6 points clear, 13 games to go. But the team we're going to be 6 points clear of, we play next. Yeah. And so, like, they call that a 6-pointer because it can go either way, right? If they win, we win. Anyway, listen, Eric, good to see you, man. How are you, brother?
Feeling good. I think we got to bring the vibes up in here.
Yeah, come on, man.
Yeah,
I'm good. Like I'm over it.
We're good. We're ready to talk about banking and stuff.
Yeah, let's talk about Bitcoin. Let's talk about the end of the world. How you been though? Like, your book's been out what? How long has your book been out now?
It's been out over a year now.
Wow.
And I've been good. I've been working a bunch, and there's kind of like, I'm setting up a fun thing. I won't go into like too much detail around it, but yeah, I just been working pretty heavily building in the bear market, and yeah, it's been good. I haven't been as active on Twitter. I also feel like Twitter is it's different.
Yeah, it is.
The vibes are off.
Yeah. Well, so it's like that community you build around Bitcoin. It's harder to get to it now. Elon Musk has made this decision. He thinks he wants to give you be the front page of the internet.
Yeah.
Or the front page of Twitter drama.
Right.
And so, like, if you post something about shooting down a fucking balloon, make a joke about it, you get 2,000 likes. You post something about Bitcoin, you get 200 likes. Like
Right.
I've noticed that, and
Yeah,
it's just
same.
like, this is a bit shit.
Yeah.
Are you on Nostra?
I am. The UX is just tough for me right now. I'll like hop on and I'm kind of playing around with it still. But I definitely noticed it on Twitter too. It's funny too. I took one of my tweets from the bull market that, did very well, got like a few thousand likes, and I just copy pasted it just to like test and see how much engagement it would get this time. And it was like a third.
Well, what was the tweet? Was it like Bitcoin's going to the moon?
Oh, you know what? I probably actually shouldn't say because it's related to a certain person.
Right. I'm going to go and have a look now.
Yeah, I don't know. I think he's kind of fucked it up. I think he's kind of.
I agree. I think he's fucking it up. It's going way worse than I expected it was going to go.
Yeah, I think the reality of, he got to do like his dog whistle to everyone who was kind of dog whistle. Is that a bit unfair? He basically Twitter was very left.
Yeah.
And I think we all knew some weird stuff was going on. And he's got to like do his fanfare drama around that and like interesting stuff. Those Twitter files are interesting. And then he's like sacked a bunch of people and said, yeah, well, too many people employed. I think we're starting to realize why those people are employed.
Right.
And now he's fucked with the algorithm so much. Like, I think a lot of people are like, this just isn't as good anymore. And we joke. I think the algorithm is looking for violence.
That's interesting. Yeah, I just because of how it works now, I don't have the same urge to get on as much and like post, and the engagement's off, and I don't like what I see usually. And
Is that because it's like bear market vibes as well?
it's probably it's part of it, but like the general I hate the For You column.
I hate that.
It's like so annoying.
I thought that was new, but Pete said that's been in there for ages.
No, maybe it is new.
Because I never noticed that before, and now it's like I always have to like click back over to following, and then I do that, and then like the engagement's bad, and then like it's probably bear market too, but
But hold on, we've been in a bear market for a long time.
True.
It wasn't like this.
Right, that's a good point.
It's post Elon.
yeah.
And I guess there's some kind of thesis behind it of some kind of more engagement that leads to them being able to sell more ads or something. I'm just getting constant ads for The Athletic at the moment.
Yeah.
Constant ads.
Yeah.
I'm like, how much are they spending?
Yeah, I feel like every fourth tweet I see some credit card ad or something.
Yeah. But it's kind of like, I think you broke Twitter, dude.
Right. Yeah, it sucks. I don't like it as much.
Yeah. And that's a shame because you kind of want to be in your cohort.
Right.
And that's why I kind of like Nostra. I got it at first. I was like, the UX sucks. But then I realized like, there's a good cohort of Bitcoiners having a good conversation.
Yeah. No
Distraction. I mean, maybe you can build some Bitcoin lists and work with that. But I was just like, why? He put a thing up yesterday. I ended up deleting my replies. Like, what feature do you most want from Twitter? And I replied, you to undo every change you've made. But, here's what it is.
Got him.
Right, man. So we spoke about the banking system last time. You've been going further down this rabbit hole, right?
Yeah, I've been digging deeper into it. I think for perspective, the last thing we were talking about was a lot more theoretical.
Yeah.
Which I was like, this is where you kind of need to start, and then you can start building more into practical applications. Now I'm digging more into the practical side of it, and still a lot of theory. This is obviously like very prospective, and I'm assuming quite a bit about the future. But also, what I'll say is that I think when you get into the practical side of it, I think 2023, 2024. There's a lot of this stuff is actually going to start to emerge. And that's what makes this really interesting. I think it's actually pretty near term when we have new protocols that are being built, like going back to Nostr too. I think some of these other protocols that are going to be leveraging Bitcoin in some form, and they're not financial applications or anything, potentially could be. It's just a network system. But some of these things that people are using, I think there's a lot of interesting things that are on the horizon in terms of like layers on top of Bitcoin and peer-to-peer technologies that, there's some cool stuff coming up. But that being said, a lot of the stuff still, and what I've been reading into is still kind of based on at least like 10 years, and then some things like 40 years, who knows, but.
Right. And so if we had to kind of crystallize this for the listeners, how would you explain what it is you're trying to figure out here? Like, what's the kind of the kind of like elevator.
Yeah. So like, here's why this is important to me. When I jumped into this industry, I was working in traditional finance, and then it got to a certain point where I understood, number one, I had to understand Bitcoin well enough. And number two, I realized, oh, this thing actually can't really be stopped at this point. Like it's spread too far. And once I got to that point, I was like, the risk changes significantly in your mind. And you're kind of like, okay, if this thing's going to go, then where is it going to go? And I think that now Bitcoin's going to end up somewhere between, this idea of like digital gold 2.0 online. That's probably like around my worst case scenario. There's nuance to it, but generally speaking. And then at the other end of the spectrum, we have a apolitical global monetary system that could emerge. And that's like best case scenario.
So in that worst case scenario, you believe that it will sit alongside fiat currencies, potentially CBDCs.
Right. It sits as like a store of value in some form. Maybe the East starts to adopt it for trade. And, there's centralized functions that are bottlenecking its use as like, a freedom money. But on the whole, it's still like, achieve the market size of gold or comparable to. And that's good. That's good for Bitcoin in a lot of ways, but it's not what I'm here for. I'm here for the other end of the spectrum, apolitical global monetary system that enables freedom within society and reduces, the power of governments across the world. So like, I think that a lot of these technologies that are starting to emerge today are going to be pivotal in us getting to that other end of the spectrum of we have an alternative financial system here. And that needs to be built out in the right ways. And there's a lot of missteps that I think can happen along the road in terms of centralization, in terms of, custodial operations, in terms of the ability for a government to, keep it as just like a reserve asset. But that's really what I think is interesting, and what I think is really important to understand about this, because like right now we're looking at an $800 trillion market of global assets, or, somewhere around there, and a $500 billion market size of Bitcoin. And the question kind of becomes, how much of global assets will it consume? And, also a big piece of that is how much will credit exist? Because, not perfectly true. There's a variety of ways credit can emerge, but depending on how credit emerges, it could actually offset the amount of like market capture that Bitcoin has over time. So I think that, that's a really important question. Like for people listening that are thinking about what's the price of Bitcoin going to be in 100 years? Well, how the banking system around it builds out will impact that pretty significantly. If we had some sort of like fractional reserve system, and this is just hypothetical, I don't think this is going to happen, but if we had like a fractional reserve system and credit was still like very prevalent, that could cut 50% of the market size. If you think about the world as like a big balance sheet of assets that are being created, if there's no credit in the world, then Bitcoin would represent all those assets. But depending on how that credit comes out, it could actually be used as an alternative form of money, which means Bitcoin's market size is smaller by that degree. So I think, I just think it's really, really big question. And I think that there's a lot of technologies that are emerging that are going to be impacting this kind of in the near term.
Why do you think we could end up in a world of no credit?
I don't think that's true. I'm just like using extremes to make the example.
But that's like people speculate like maybe Bitcoin would have hit 100K if it wasn't for FTX. It's like the same thing, but on a larger scale, right?
Yeah, it's not like I wouldn't call it as much like the same thing, because it's
not fraudulent.
Yeah, it's not like fraudulent. There's this kind of goes back to our last episode, but hypothetically, if we have a free banking system emerge, and free banking is associated with the concept of fractional reserve banking, so it's really more like if we have a fractional reserve system emerge on top of Bitcoin, I, number one, don't think that's like the end of the world. It's not what I think is ideal, nor do I think it's like a certainty. There's a lot of people that I think is. I was on George Gammon's podcast, and he's kind of like a big advocate of that and thinks that would be the case. I think that there's a lot of unique properties of the technologies and some of these emerging protocols that could actually regulate that system so efficiently that it's very hard to run a fractional reserve institution, in which case it'd be much more like a full reserve system. So if we're in a full reserve system, then there's still ways that like credit will be emerging. Credit still has a valuable function, but
it'll be more expensive.
It'll be, and it comes down to like supply and demand, right? It's hard to think about these questions in a static format because everything affects like everything else in a lot of ways. But like, you get like all else equal. If there is less of a supply of credit, then yeah, it's more expensive. But the way in which people are accumulating wealth and how they're capitalizing themselves, there's a lot of things that can also bring the demand for it down too.
Yeah.
So it's kind of like, where does the market settle in terms of price? And a lot of people look at it from that perspective, and it's kind of like, I have no idea, but like what I think a better way to look at it is, rather than from like this bottom up view, from a top down view, where you're like, okay, what's the total market size? Will there be some proportion of credit that exists? What will that be used for? And what I think the answer to that boils down to, like, there's some people who think like, I think if you like hear like really extreme Bitcoiners, and they'll cite things like Jeff Booth's thesis, and they'll say, technology is going to advance so rapidly and productivity is going to be so fast, and Bitcoin's, when it's fully captured the market of money, is going to give people so much wealth that we won't need credit. And it's like, I don't really think that's true at all. I think that you can really reduce the amount of credit necessary. Like today in our system, we have this system that's, all credit, money is credit. So we're obviously at the furthest extreme for what credit could be. But I think that could be reduced very significantly. The question is, where does it come out to? And the reason that I think there's no way it could ever possibly go away is, you think about it from like an entrepreneur's perspective. You have an expectation about the future. You want to go start this business. You think it'll be valuable to the world. And because of that, you're going to earn some sort of like economic yield. You're going to build value from creating this business. So you have to either finance that with savings, which Bitcoin will probably help quite a bit with. People have more savings. You'll probably see quite a bit more businesses that are organically financed by the savings of the entrepreneur. Certainly true. That's not going to be true in every scenario. There's still scarcity of resources. There's going to be a poor guy who's a genius who wants to go start this great business, and he's going to want to go get financing for that.
Well, there's also plenty of people out there who are very wealthy who still take on, still borrow money to start businesses.
Totally.
Because they want to spread the risk to other people.
Yeah, because we're incentivized to do it in our system. I mean, there's tax benefits from it. It's like that's one of the biggest, like whenever I get into this debate, this point comes up. We're fundamentally incentivized to take on debt. Like, you should take on a mortgage of $200,000 and basically just like perpetually roll that thing over. Like, there's so many advantages to doing that. So like, whenever there's like really cheap debt and there's tax benefits to taking it on, then it makes a lot of sense to do it. But like, if you hypothetically, if you like even remove that incentive, then it's like, well, why do you want to take on debt? And it's, if I'm an entrepreneur and I want to finance my business, then I can choose equity or I can choose debt. Equity is effectively just perpetual debt. It's debt you have the rest of your life until you like buy the guy out. So would I rather give this guy ownership and decision-making over my business and have a perpetual liability with him? Or would I rather just have a liability that I have fixed for a period of time? I'm optimistic about my business. I know that I'll be able to pay it off at a certain point, in which case I still own the whole business. So like, as long as there's a demand for a cheaper form of financing like that, there's always going to be demand for debt in some form.
And when you talk about the spectrum, you talk about your worst case scenarios. Bitcoin is gold, digital gold 2.0.
Right.
And your best case is apolitical global money. And that's what you're here for. Is that because if we were only digital gold, will you feel like we've missed an opportunity here? Is there something a little bit more ideological, like the way you see the world? We need this.
Yeah, exactly. Like if we don't make Bitcoin an alternative monetary system, then I struggle to see how we'll do it without some sort of new crazy invention that nobody else expected. So it's like, we pretty much have to make it work this time. And if it's just digital gold, then we'll have some sort of potentially reserve standard system again, which is fine. But it's really not solving all the problems that we have.
And I wonder, or I worry with something like that, is that people would lose interest in it because there isn't a big enough mission behind it.
Right. Yep.
If we were just digital gold 2.0, this show kind of loses purpose.
Right.
It's like, what the fuck are we going to talk about?
The gold podcast.
It's going to be like the digital Peter Schiff shows. Boring as shit.
Yeah.
No, but it's just boring. It's like, what are we going to talk about? Like, there's nothing to talk about.
Gold went up 5% today.
Yeah. But if you look about the kind of shows we make right now, we're talking about energy markets. We're talking about nuclear. We're talking about the IMF, the World Bank. We're talking about malinvestment. We're talking about incentives around political cycles. We're talking about all the things where poor incentives allow that central ruling class to fuck everything for everybody else.
Yep.
And we all recognize Bitcoin as this kind of fairer system. And I mean, even to the point where Jason Meyer, do you know Jason Meyer?
No.
He's a guy who was on our show. He's a progressive guy. He's writing this book, A Progressive Case for Bitcoin. Really, really great guy. I keep telling him, you've written the most important book for conservatives. And the reason it's the most important book for conservatives is that if this is seen as a tool of the right, we failed. And so conservatives do not want to fight Democrats on Bitcoin. They want to work with them because it's money.
Yeah.
It's like fighting them on the dollar. So you've written the most important book for conservatives because conservatives should want Democrats to get it, understand it, and not fight about it.
Right, right.
Hence apolitical.
Right. Yeah. And like that's incredibly important. I think that when I think about all the benefits from it, I mean, the biggest thing that I see, here's what I think is like so unique about how it can change things. It's the question kind of becomes like, why do you want your government to be powerful? Because they provide your security. You know, it's like kind of naive to a degree. If we were just to go undermine the U.S. government tomorrow, and if all their military power disappeared, now we're all huge at risk, and a bunch of horrible things could happen to my family. So I don't want that. What I do want is for all of the governments simultaneously to start to reduce their amount of power. And like, that's what's unique about Bitcoin is it creates a possibility where like, if we have some sort of massive currency run in 20 years, like, boom, that's how you do it. That's the only way to do it. And yeah, it's kind of crazy, and we got to make that work.
And in part of this, you've decided to kind of like nail down and start thinking about how, I say the banking system, it's really the entire financial system works. Like, what is the reality of this? And I guess during that period of we are here now, where we are with Bitcoin, $500 billion asset, lots of cool, interesting things happening, this future scenario, which may be 10, 20, 30, 50 years away. In between them, we've got parallel systems.
Yep.
But you are spending your time thinking about this transition to this pure Bitcoin financial system, pure Bitcoin banking system.
Right. And also, I think the next step is going to be for me to go deeper into like how that's bridged. So like, I'm trying to figure out the long term and where we could get to. And then that's obviously a very vague idea. But once you kind of have that end goal in mind, then you can start saying, okay, well, what technologies do I have today? What's needed to get those to the scale that's necessary to make the system happen? Then, therefore, these are the technologies that should be invested in today. So like, I have a little bit of understanding around some of that, and I have a few ideas, but there's, it's endless amount of information and knowledge to start working on.
Well, you have to have a thesis.
Right. Yeah. So like my thesis is basically I hope for, number one, that we have a market-based system. I think that that's just the most paramount aspect of how this all builds out, whether it's fractional reserve, full reserve, whatever it is. I just hope that it's chosen by the market of whatever it should be. And really it's like, Bitcoin has, three kind of primary problems. It's, transaction throughput, which Lightning is devised as a solution to, and we'll see if it gets to scale. And then we have privacy, which is another fundamental issue, and programmability, which isn't a fundamental issue, but it's been much slower than like the rest of the crypto ecosystem in certain ways, for good reason. But I think that, when I think about technologies that can benefit that, I think the Fedimint protocol actually has a very interesting proposition for how they can solve kind of the privacy and programmability aspect of it. And when I think about that, it's kind of like, I bring this back to, in the first chapter of my book, I talked about how, throughout history, there's always been multiple forms of money within an economy. So there's kind of this Bitcoin narrative that we would only have one form of money. And it's like, well, obviously it won't be crypto. Of course, that was an absurd proposition, but will it be, maximally one form of money? And I was always like, well, there's kind of three reasons. There's information opacity. And throughout history, it's kind of like, you're a tribe, you got money. Another tribe shows up, they got different money. I don't know how to verify your money. We're not going to use your money. And there's things like that. The internet today is like largely reduced a lot of that. And then the other big ones, like, today is sovereign coercion. We have a lot of currencies because it's in a government's interest to issue their own currency. So that's why we have so many. And then the last one's monetary utility trade-offs. So like from a fundamental perspective, thinking about money, there are trade-offs that exist. So when you think about the problems that Bitcoin has, how are we resolving that? It's like, well, Lightning Network's one. And it's funny because like, people refer to Lightning as Bitcoin. It's like, well, you can kind of make an argument that it's actually a separate, asset. It doesn't have the exact same properties as Bitcoin. Therefore, it is different. And it's more a semantic argument than anything. Like as long as markets practically view it as fungible with Bitcoin, then that's probably really all that matters. But like you can make the argument that, well, Bitcoin you can keep in cold storage, Lightning you got to keep in a hot wallet. So it already has different risk properties. You have, state channels that have a channel capacity that limits, how much you can actually send. Bitcoin doesn't have that. So it is fundamentally different in terms of how you can use it for the sake of its utility. That's why we had to create a separate network. And then you get into like Ecash, which is used by Fedimint. And I think that, that could be another potential avenue for that because it solves like privacy and programmability. So it's like, and we can get into this, but like if, hypothetically that was something that emerged, then we'd effectively have kind of like 3 monetary mediums. And like, throughout history, we typically saw like dual monetary standards. So maybe we cut the semantics, call Lightning Bitcoin and say we have like a dual monetary standard. But nonetheless, there's problems that need to be solved, and we're solving them with currently 2 different networks. And if we had a third network step in, I think that could be potentially valuable. So my thesis right now, and this isn't like, I don't want to call it a thesis because it's not certain, it's a curiosity that I'm digging into. But I think that an eCash system of federations around the world is actually probably a viable optimization that could bring us to like a Bitcoin native banking system.
Okay.
Yeah.
Well, so we've covered Fedimint. We've had Obi on the show before. Not everyone will have listened to that show. And I think more may go back and listen to it now after hearing this, because people are really drawn into the shows where we do talk about the banking system or macro of the future. So just for those people who haven't gone and listened to that, don't know what Fedimint is, can you just explain what it is?
Yeah. So, and I think it's kind of good to like build it up fundamentally, because when I first heard about Fedimint, I was like, I don't really think that's a great idea.
Yeah, I dismissed it, by the way.
Yeah. There was a lot of things about it. I'm like, I have no idea how that works. But the deeper I got into it, I was like, number one, I didn't understand it well enough. And then number 2, I had a myopic perspective about how things work in the world. And for me, growing up in suburban America, it didn't make any sense to me. But if you go down to Africa and you actually understand how, societies are structured, it's kind of like, oh, well, it actually like fits kind of nicely into how they operate in general. But anyways, I think a lot of it kind of boils down to, you want to start with understanding like how trust works for people. And it's like, right now we have this, 2022 was the year where we realized, or, the average individual who's involved in crypto realized that third-party custody is a pretty bad thing and really bad things can actually happen. And, Bitcoin maxis aren't crazy. So when that occurred, it's like now a lot of people are drawing into self-custody, and then self-custody is the other end of the spectrum. And we have people within our community that all understand that. And they're like, okay, self-custody is good. I can spend the time to learn that. But when I think about what my mom is going to do for her Bitcoin, it's like, well, how does that work? My mom's got cold storage Bitcoin. I manage it. It's effectively my cold storage Bitcoin. She has no idea how to use it. Yeah. So like, that's one of the problems, is that like not everybody is going to want to learn how to do self-custody. And maybe in the long term, like, 50 years from now, whatever the generation is below Gen Z is like, everybody manages it themselves. It's like brushing your teeth or something.
Well, I think that will come down to the tools we have at the time. That like I kind of constantly bash people with this one, but my dad, there is zero chance he could set up a cold storage. Yeah. You could show him and he could write it down. But when you explain to him, look, by the way, if you get this wrong and you lose your Bitcoin, there's no customer service, it's gone. He's going to be too nervous to use it as well.
Right.
And so even if he could technically learn it, I know he wouldn't have the confidence. And there's always going to be people who do not have, one, the technical skills or the confidence to do it. And and they should not be excluded from our system because of that.
Right. I agree. And for a lot of those people, it's not even like a misunderstanding of Bitcoin problem. It's a just general technology education problem. It came at a later point in their life. They didn't feel like learning it. And now it's like developed so rapidly and they're just like, oh shit, I kind of missed the boat on this one.
Yeah. And we have to understand that we live in a world of technology. And when ChatGPT comes out, we're all playing with it straight away. And when the next thing comes out, we will play with it. It's native to us. It is not native. My dad probably doesn't even know ChatGPT exists.
Yeah, same. My mom has no idea.
Yeah.
And like, I think from that perspective, it's like, okay, so we have a market of people with different demands and interests. If we're going to be trusting something, is it better for my mom to use a third-party exchange or just to, trust somebody within her family? And that's kind of the idea, is that like, anecdotally in my life, it's like I've helped a lot of other people in my life get into cold storage. I give them constant handholding on how to do things, and I get them set up. And I think like people kind of naturally operate in that way. There's people within communities and within, their families who have certain specialties and skills, and people trust one another and support each other. And I mean, you can tie this all back to like evolutionary theory with, so it was, John Maynard Smith, like the reason that, humans have probably outpaced every other, not probably, because we have outpaced every other biological organism, is because we could cooperate so effectively. And that was something that allowed us to organize and specialize and like build the societies that we have today. So, there was John Maynard Smith, he had this, he posited that basically it's called the evolutionary stable strategy. And that's that we naturally evolved to find Nash equilibrium when we're making strategic decisions, which means we evolutionarily evolved to cooperate. We don't just think in our own interests. We can think in terms of other people and their perspective, and then we can find a common ground that makes us both better off by cooperating. And it's unique to our genes that we can do that. So that's a really interesting piece, because we already naturally have an affinity to do that, which requires trust. We're also very good at picking up on cheats and cheaters because of that. Whenever you have like a hunch or something, or you don't trust somebody, it's like that is a subconscious, evolved state that you've gotten to not trust a certain person. So like that's really good because we can optimize around that. There's another like hypothesis called the social risk hypothesis, and that's that like depression is this adaptive risk averse trait that we have from social exclusion. So a lot of people get depressed because they're excluded from social groups, and you can see how like bullying is so bad for that. And that's another thing too, is like not only did we adapt to cooperate, but we're also negatively conditioned at a genetic level to not be a part, or to make sure that we don't get excluded from communities. So like that's a really interesting piece too. So when you think about it from that perspective, and you think about how communities work, and if you look at countries like Africa, where we have all these like agricultural economies where people are living in communities and they are trusting each other for various different functions, it's kind of like, okay, if you're going to trust, then trust your community. And we can optimize trust based around that. So when I think about custody, and it's kind of like, how should we be optimizing custody? Well, it's like, it's number one, it's a free market. Anybody can do whatever they want. But I think that having a solution that enables us to optimize for custody at a community level is pretty valuable and compelling when you think about how humans work. So that was kind of like the first piece that I got into when I was like, okay, it's actually very interesting. That was the first thing that turned me off to Fedimint. I was like, oh, Federation, like, side chains kind of did that. Side chains didn't get a ton of traction.
I think you've explained why Fedimint will work on a kind of like social and psychological level, but but what actually is it?
Yeah. Sorry. So I want to build to it, but it's basically like, that was the first thing that kind of made me realize like, okay, people operate this way. So like, how does the technology actually work? A federation is just a multi-signature. So if you are going to send Bitcoin, there's a multi-signature, which can require some threshold amount of keys in order to send it, which requires you to cooperate with another person to send Bitcoin from that address. So that's just one layer with Fedimint. Fedimint is just a multi-signature address. If you join a community, they have a multi-signature address, you send your Bitcoin to that address, and they're now custodying it for you.
So we could pretend in this room, that's a community. It's you, me, Danny, and Jeremy.
So we would pick the leaders of our community who we trust the most. So that'd probably be me and Danny.
Yeah, fair.
And then you guys would send us your Bitcoin into the multisig, and then there's a whole separate layer of software that they use. So like once it's within, all these guys have, just think about it like servers within their homes, and we'll call it me and Danny. Both Danny and I have to agree to send Bitcoin away from this, so we could collude against you and Jeremy, and we could say, all right, we're going to send off your Bitcoin, and we're just going to take it. We're going to go have a night in Soho. And I think that when you think about that, it's like, okay, that's a pretty big risk. It's also a risk in centralized custody as well, that people cooperate and can do certain things. I mean, we look at what happened with FTX, and it's like, who was even in control of the funds? Like there was basically like one guy in control of the funds. So when you think about it like that, it's like, okay, when you compare it to third-party custody, it's actually a lot better because there are people whose interests are aligned with you, and there's a risk of social cost if they defect against your interests. But like that's kind of the key hump to get over, is that if I was trusting my finances with my mom and dad, would they steal it from me? And that's kind of the idea of entrusting something to a community leader. So they have all these they have these computers that are set up to have that ability, and they're storing it to you with like, assume like the best practices for cold storage. And then on top of those servers, they also have other software that's running. And that's what like the Fedimint protocol really is, there's this one part that's a multisig that enables you to interact with it, because the other part of the protocol issues you a separate monetary asset called Ecash. Ecash is probably the most optimally efficient way to achieve privacy today. I read into some of the other technologies, and they're either a long ways out or they'll probably never get implemented. When you think about, there's like zero knowledge rollups really sounds like the only one that would be superior at a technical level to something like an Ecash privacy token, which I'll explain in a second. But zero knowledge rollups, all the ones on Ethereum right now, they're just, like everything else, there's a backdoor access key. They don't actually have the degree of trust loss that you have. The only thing that I think like a superior quality is they have the ability to voluntarily exit from it. So like that's kind of an interesting property, is the ability to like, if you put an asset into a zero knowledge rollup, think about it kind of like a side chain, and then that enables you to do all these other things with it. And it doesn't like bloat the main chain and have the same costs as the main chain. And it allows you to permissionlessly exit, assuming that they can actually implement these in a decentralized way. So like that's the first thing, is I don't know if they're going to get there. I don't know enough technically to actually get to that point. But the other thing is too, is like, even if we were to implement a technology like that, it would require a soft fork in Bitcoin. We all know how hard those things are. And there's a lot of uncertainty about how that would impact the base chain. So it's kind of like, I'm not super bullish on those, at least in the near term, and maybe long term they do. But what's interesting about Ecash is, this technology has been around since the 80s. It was created by David Chaum. And that was actually like kind of the first like real, I write about this in my book, but it's like, the first real attempt at creating like a digital Ecash by the cypherpunk movement. And it's funny because now it's like, come full circle 40 years later, it's like now there actually kind of is, now that we have a digitally native money that's emerging, we can take this technology again and we can use it. So like you put into the multisig, you get issued Ecash, and then that goes into like, your wallet. You have a wallet that operates on software that allows you to leverage Ecash. And then because we're using a different monetary asset, the Fedimint protocol has like all these other different technologies around it that allow you to create things that are much more programmable. So it's like by pushing it into this new form, we can actually have all these other new forms of utility. We can create all these applications that you couldn't create directly on Bitcoin because Bitcoin's constrained in a lot of different ways. So like that's what's kind of compelling, is that it's probably, it's the ease of the developer experience is a lot greater within this type of system. And you're effectively creating this form of digital privacy, which when I explain that, it's basically like when they issue you Ecash, they're actually issuing you something that will, if you have a wallet on your phone, when they issue you Ecash to your phone, you send your Bitcoin to them, they come back, you have Ecash. It's literally living in the memory of your phone. It's not a blockchain or anything. It's just Ecash on the memory of your phone. Now it has backups and stuff like that in case you lose your phone. But what happens is like you have your Ecash, I have my Ecash, I send some to you. And what happens is by doing that, the technology will send that information to you, and then it'll immediately check at the Federation servers whether or not that's already been redeemed. So the Federations don't know who has what. There's no blockchain tracking it. What they do know is that I issued this eCash. It has a unique ID. It went to this guy, and then if he goes and checks it and it hasn't already been redeemed, then they refresh it and give you a new one. Now that sounds complicated, but when it comes to like automated software, it's actually a simple process. What it allows you to do is to verify that that hasn't been double spent. So
why do we ever need a blockchain then?
Right. So like, yeah, exactly. So like, why do we need a blockchain? It's because, there's, it doesn't have the same security properties, right?
Right.
So like, and that's the key thing is that, and we can get into this right now, but I think this could be potentially better for later in the discussion. But basically, it's like you're trusting that the Federation will issue the amount of eCash that's proportional to the amount of Bitcoin they've received. They could issue more. They have that ability to do that, and because of that, like you don't have those degrees of certainty, which complicates it quite a bit. And then that kind of gets into like free banking theory. And then there's quite a bit that I see emerging in the system that would naturally prevent some of the negative incentives or mal-incentives that could emerge from having that kind of an ability.
Yeah, so we've kind of identified two of the issues I have with Fedimint. The first one being is that we for years have said, not your keys, not your Bitcoin. We keep saying, not your keys, not your Bitcoin. Now listen, if my dad needs Bitcoin, I'm going to manage it for him.
Right.
There's zero scenario I steal from my dad. There's zero scenario I steal from my children. There's zero scenario I steal from my brother and sister, right? There's zero scenario I steal from anyone. But by moving to a multi-sig where we are trusting others to manage our keys for us, I think there are many scenarios where people may steal. They may go, you know what? I don't care about my social position. I can collude with Danny. We can move to Panama. We can run away with this Bitcoin. We're done. And I have no doubt in my mind, with all these different federations building up, there will be some scandals in there. This federation in, I don't know, Buenos Aires, 3 guys ran off with it. This federation, like there will be scandals. There will be scenarios. And why would, I trust fidelity more than I would trust a federation of individuals. I trust a company more than I trust a federation of individuals that isn't my family. Like if I built a trust model, I would go, the top, trust me, I can do my own. If I can't do my own, second one, and I have to do some alternative custody, I think I trust a fidelity, because with fidelity, my risk is more state capture. I don't believe there's a scenario where Fidelity aren't lending out my Bitcoin, so there's no risk there. They'll have good protocols in place for managing it. Coinbase have proved themselves, despite not being the most popular exchange in the world, to be one of the most trusted places to leave your Bitcoin if you're going to custody somewhere. And then if I had to go like a Fedimint, a federation to me is below that one in terms of the trust level, because I'm having to trust individuals. Do you get what I'm saying there, Danny?
I get what you're saying. I don't know whether I agree, but I get what you're saying.
I think a lot of it comes down to the perspective, right? So like when we say like, what is a federation? What is a community?
Yeah.
That's also something that I think is going to be redefined potentially. So like from the perspective of, would I trust my mom or dad? Sure. Would I trust my pastor, or would I trust my, gym coach or whatever it is? Like there's different extents to which you can think about it. What about commercial institutions that are leveraging this technology? Would you trust Fidelity more if you knew that their custodial operations had, a certain setup that they did to maintain security properties so that nobody has any sort of, full control over everything, which they probably do. So it's kind of like, well, maybe you are trusting a very similar concept in a certain form. It's more the legitimacy of the institution, the scale, and the Lindy effect for how long it's been is what you're trusting.
Yeah, no, absolutely. That's what I'm trusting.
Yeah.
And presumably, if you trusted the companies more, there's no reason that Kraken, Gemini, Coinbase, Fidelity could all set up a Fedimint of themselves, and you had trusting all 4 companies rather than an individual one.
I think that's a brilliant scenario.
Exactly. So that's exactly the point. Like, what is a federation going to be? It's really just a technology that can be leveraged in a lot of different ways. Yeah.
And so the second thing is on the eCash level, the idea that people can print as much eCash as they want and you would never know because it's not transparent.
Yeah.
Means somebody can just essentially print free money.
Right.
that one I'm still struggling with.
Well, yeah, until we set up our own federation, Pete, and then we can.
But you know what I mean? It's like no, but if you think about it, it's like if the great thing about Lightning is when you put Bitcoin in a multi-sig wallet, to add Lightning to your wallet, there's a 1-for-1, right?
Yeah.
And then when you convert your Lightning sats back into base chain, it's a 1-for-1. You know that. How do you know what the 1-for-1 is on Ecash?
So this is going to be pretty long-winded.
Yeah, tell me.
I think while we're actually still on that, because I've got a question for you.
Yeah.
If presumably, like if me and you set up a federation, we aren't registered, so we can't charge Peter to use our federation, right?
When you say not registered, because it's not like
we've not got like a financial, I don't know what the fucking license would be, but we don't have that license to be able to charge a fee for us to custody his Bitcoin.
I'm not an expert on the regulatory piece. I know that basically, like, if Bitcoin is a commodity, and you're charging a fee for some of those things, then it gets a lot more complicated. I'm not sure exactly what you qualify as necessarily.
But I'm presuming that if, like, say, Gemini, Kraken, Coinbase, whoever set up a federation, they could actually charge for theirs.
Yeah, custodial service.
Yeah.
Yeah, that is, the decision making is held by parties with competing interests, which I think is an interesting model. And it's also, kind of one of the ideas around like Liquid is a side chain is like, let's get a bunch of the constituents in the industry to all set up this side chain that they need permission to adjust the rules of, which is, I think it's interesting. And I think that despite Liquid not getting a ton of traction over the years, I don't think that we've seen the last of that concept. I could see that emerging in the long term. I
really like Liquid.
I think it's a good idea. Yeah. I think it comes down to timing. And that's another piece around a lot of this is like, I talk about the term like irreducible complexity. Like there's probably a lot of ideas that are really valuable that have emerged, but the timing was off and there wasn't other things that needed to be built before it would work.
And how different is Liquid to Fedimint? Because it seems very similar.
Well, Liquid's a blockchain.
Yeah.
So, there's...
But it has a federation.
Right. It's effectively a federation. That's where the idea came from that the Fedimint protocol is using. And I think the first was technically RSK in terms of implementation. But yeah, there's these ideas that I think with the federation, it's going to exist in a commercial form, probably in a very different way than it does in a non-commercial form.
Okay.
And I think that'll be kind of like a key distinction of how it might bifurcate in terms of its use cases. But going back to your point, so what will prevent somebody from issuing too much Ecash? Well, if you go back to the community trust idea, and this is a good place to start, there is probably an incentive to not undermine the earnings of the entire community that you're in. And that's not something that you'd want to build upon, but it's likely true that that wouldn't happen. Also, if you think about it from the community model, there probably wouldn't be as much to gain. Like it would kind of quickly undermine your community as a whole. If you consider like 20 people and you just like inflate the value of something, you might have had a pretty good day or two,
But how would anyone know?
Well, so the Guardians would all have to collude between one another, and then prices would just start rising. Like it wouldn't even make sense. It would be so noticeable. You'd just be like, Steve is just giving me like 100 Ecash, and I know he doesn't have that. Like, where did that come from? Like it would be something that would be obvious.
How would you know that Steve shouldn't have 100 Ecash?
So the only people, there's technically all the different servers of the Federation are like, they're tracking the different issuance that they're making of Ecash. None of them have a perfect record and they have separate records from one another. But they could voluntarily report it is one thing that could happen. And that's possible. They could say, I've issued this quantity of Ecash between the different servers, and you can come with a pretty good idea of how much Ecash has been issued. But it's still something that, like you don't have 100% certainty of like, I guess I'm not certain of this point. I'd have to dig into it, but I don't think that you can actually have like 100% certainty on proof of reserves with it. Digitally native proof of reserves, you can always have somebody who's like, issuing a loan based on the multi-sig completely outside of the system.
I guess what I'm trying to say is like, it's like, we're going to have to go super basic here.
Yeah.
We're a community, right? But say there's 100 people in this community, but us 4 control the multi-sig, right?
Yeah.
And all these people have, put 100 Bitcoin into this. into our Fedimint.
Yep.
Okay. Does everyone get issued Ecash based on the amount of Bitcoin that went in?
Yes, that's the idea. But theoretically, they can issue more.
Yeah. So what I'm saying is like, so for that 100 Bitcoin that went in, there's 100 Ecash that can go out, right? But what stops, and say we all put 10 Bitcoin in each, us 4, and the other 60 Bitcoin came in from the other 100 people. And then say we issue everyone their, Ecash, and we're meant to get 10 Ecash each. But we turn around and go, let's just do 11.
Yeah.
How the fuck does anyone know?
No, I think that it's going to be hard for people to notice that. There are ways that can emerge. So like you can have federations that are voluntarily reporting how much they've actually issued. I'm not sure how it works at a technical level with like verifying that, but you could have a federation that opts in to say like the federation as a whole, all the Ecash that's been issued on their servers can say, here's how much we've issued. So I think that we'll probably have some sort of, if we assume the system at scale for this particular point, we'd probably have some sort of system where if you want to be a part of something, only if it's verifiable, you could have something where like the amount of Ecash is verifiable. There's probably a way that you can have that set up because there is memory of it on the servers.
And the different Fedimints, are their Ecash compatible with each other?
No, and like that's another big thing. So I think like the best way for me to explain how I think this will build out is to just like jump into the theory, but it's basically like we'll have a bunch of, if we assume a world where there's, a million different federations, they're all issuing their own Ecash. Basically how the process works is everybody within that federation, they're all trading amongst each other their own Ecash. But if they want to trade their Ecash to another federation, what they're using is the Lightning Network. So they're going to have these operators called Lightning Gateways. And that's basically like a Lightning company, like a Lightning service provider. And they're going to act as a market maker. So that term basically means in finance, if you have an institution that stands ready to not indiscriminately, but to always buy and sell an asset based on a spread, and they adjust their spread based on their perception of risk, but they make the market, they're always a buyer or seller for you. That's effectively what these guys are going to be doing for Ecash.
Like a money changer.
Right. So what they're doing is they're accepting Ecash from Federation A, and then they're sending a Lightning payment over to Federation B of the equivalent amount.
But if you're the user,
yeah,
and you go onto this website and you're like, cool, I want to buy this shit. I want to buy this bottle of water.
Yeah.
It's 0.0 whatever, Ecash. I don't need to know what federations that's part of. I will just pay, and all that should be done in the background.
All that shit gets done. There's costs associated with it. I think a simpler way of thinking about this too, that isn't part of how it's structured, but could potentially emerge. It's basically like they're using the Lightning Network as a way of forwarding payments, which is kind of like almost like a scaling mechanism to some degree, but like, and it creates more fungibility. But you could also just effectively have a market maker who doesn't even use the Lightning Network, and they just sit there and say, I'll accept A, and then I'll give, Ecash to B. And they hold a balance of like all the different federations around the world. And they're constantly just like swapping the different ones to keep everything fungible between one another. And they might say, oh, Federation A, we have knowledge, or we, are part of this community or something. We think that you're doing something sketchy. So like if you're a market maker, then you're integrated with the software. You have like a knowledge of how much Ecash you've received on balance from them. You have a lot of like access to information with people. And because of that, it gives you a better, like if there was somebody doing some like crazy shit where they're just like, we're going to hyperinflate our Ecash, then the market makers would be knowledgeable of that. And they're not just going to like indiscriminately. Because, okay, let's say that you've been working with this community and you know how much of the on-chain multi-sig Bitcoin exists, and you're processing a certain amount of transactions every single day through them, then you can look at like volumes, and it'd be pretty easy to tell if things are starting to get abnormal. There's like indicative information. Also going back to the point, maybe a market maker says, we're only going to deal with this federation if they're reporting like the total amount of Ecash issued to us.
But you could get into scenarios and you're like, all right, I want to buy this. I can't buy this because that market maker doesn't work with this. I don't mean to be a dick. Like,
not at all.
But I think my problem with Fedimint, it just feels like one, it's got a lot of holes in it. It's overcomplicating things. And what was the third thing I didn't like about it? That it seems to be like we're ditching long-held principles and beliefs about Bitcoin to establish it.
Yeah.
And I constantly, every time I come to it, I'm like, I don't get it. I don't get why
Yeah.
Fedimint seems to have too many issues.
I think that it's I agree with all those points. I think that the biggest risk to Fedimint is its complexity.
Yeah.
And because it's like, well, I haven't even spoken about all this yet, but I think that it's like a really, really big idea. And there's so many different moving parts, like what we're starting to talk about with some of this stuff. But I think that there is also a lot of benefits that can emerge, and it's potentially an optimization of some of these things. So like that's what gets me comfortable, is that we're kind of optimizing around some things. Is it like at the end of the day, everybody can still self-custody. And and like, let me be clear, when I talk about what I'm talking about, it's a lot more for like how I think applications and like banking functions will emerge. There's going to be a lot better self-custody things. People are going to get more educated in that. The whole point is that we have enough self-custody to where the system remains, permissionless, so that we don't turn into digital gold 2.0. Like that's the whole point. Maybe that's 20% of all Bitcoin. Maybe that's 30%. I have no idea, but it needs to be as much as we could possibly make it based on the consumer utility trade-offs.
And listen, dude, I get it. Right.
Yeah.
When I went to El Salvador, the thing that really stood out to me is that I own Bitcoin and I have a multi-sig cold storage solution. And I live in a house made of bricks, which is locked, and I can go to banks or other houses or offices or family places in other countries where I can get on a plane, and I can have quite a complex multi-sig, which gives me like a very high level of security around my Bitcoin.
Yep.
Okay, so then I'm in Bitcoin Beach, I'm in El Zonte, and I see people who literally live in a tin hut.
Yep.
And it's like, well, firstly, even if you have a hardware wallet, where are you hiding it? Because someone can just peel the door off because it's made of fucking tin.
Yep.
Are you burying it in the house? Like, what are you doing? And what if you want multi-sig? Like, there is a privilege. There was a privilege to being able to use multi-sig effectively. And so I get it. At the time, I'm sure I talked about this on the show. Didn't I talk about this? I was like, and in my head, I was like, do you know what I would want if I was them? I would want to trust someone like Blockstream to do this. So I think there is potential solutions to this, but I don't think it's Fedimint. I think it is something like Liquid, whereby there is a federation that's built whereby someone like Blockstream essentially becomes a banking provider, and you store your Bitcoin with them, and then you maybe get like a Liquid token, which you can access and withdraw as and when you need, like small amounts. Like that to me works. Fedimint, I'm like.
So it goes back to the point that Danny made earlier. He's just like, why can't a Fedimint be a bunch of these other institutions combining together?
Yeah.
And like, that's the idea, is like your vision of, like Liquid or Blockstream or what they're doing. That's something that can exist within this ecosystem. And like, this comes down to, I think it's more of like a business aspect. I think is kind of the argument here for like adoption. But I think that, you can have that exact property. Does it have to be a side chain technology, or could it actually be like privacy Ecash, which is a benefit? I think that what we're going to see is Lightning service providers are probably going to be setting up federations and operating within that. So they'll act as like the Lightning gateways, assisting with transactions. They'll probably also be like commercial banks, which is what you're thinking about. And maybe most people want to put their money in like commercial banks like that, and they want to do it through a federated system like that. And that would effectively be the advantages of where you're talking about with Liquid, and then you like pair on privacy layers to that too, which I think is interesting. But I also see an avenue where there is community trust, and we have community banking systems start to emerge with custody. I don't think that there isn't a market for that. I actually think it could be a lot larger. Sure, there's plenty of examples where it wouldn't make sense. Also, in some of those ones you brought up, I think that like, in like the Mud Hut example, it really comes down to mobile technology. And number one, the requirements of Fedimint are probably going to be low enough in the near term to where it can be run like on mobile phone grade technology, very cheap. But also there's going to be like the ability to host, and the keys just held on your phone, or it's held wherever you want to hide it in your Mud Hut. So like there's a ton of ways that it can emerge. And what I think is interesting is I think it's piecing together multiple technologies that allow people to choose this. So like going back to the Ecash piece, let's say it starts and a bunch of people start issuing Ecash and they all debase and a bunch of people get screwed over. this type of technology doesn't even have to use Ecash. The programmability aspects are based around that. But, at the end of the day, it could just be federations that are sending lightning payments to one another, because like these federations have Bitcoin, they have Bitcoin technology, Ecash technology, and Lightning technology on them. They could just say we never even want to use Ecash, and maybe that never takes off. I think that the reason that it probably will is that the programmability functions are actually probably going to be a lot better, because there's not like the same degree of like capacity limitations on Ecash. You can just do a lot more with it. And then the rest of the arguments I see for why I think it might get traction is just from like more of like a business angle. It's kind of interesting is, I think people think about a lot of these technologies in terms of like, what created like an organic desire for these networks to grow, which is definitely a very, it's the right way to be thinking about some of this stuff, but it's like, was there like an organic desire for Binance to become the largest exchange in the world? Or was it just because they did a shitload of business development all over the world and they were like pretty early? And like, I think that that's another interesting way for how you get like adoption in these things is like at the business angle, if these things start to emerge like that, then, that can also give something a competitive advantage. So you probably want a combination of both. But nonetheless, like, I think that Fedimint has a lot of implications, and it's really just like a base protocol technology. It's kind of similar how to people think Nostr is, a lot of people think it's like Damus, like, because that's the social media app that emerged on it. It's like, really, it's just like this simple relay tech. But like when I first heard about it, I was like, oh, like Nostr is like a social media thing. It's kind of like that. Like Fedimint started with like privacy, and then there's like federations for communities. But like it's just a technology. I don't know exactly how it's going to grow. I just see a lot of avenues from which we could see different systems emerge within this technology, and maybe it's just like a liquid sidechain type system.
Well, what kind of use cases then do you see? Give me like we've talked about, maybe it's like a community bank. It's maybe a like an error-free bank.
Yep.
But you also said actually it might be more like a business application.
Well, no, not as well. So I was saying more like if it gets traction,
Right.
it could be from like the business angle. But there's, I guess what I would say is like one of the primary angles is we have communities and community finance in Africa. There's a lot of microfinance. What I think could be really interesting is like, let's assume maybe a path to this in the next decade. If you have enough of this technology garner enough attraction, what do people want? Well, they want to use Bitcoin for its medium of exchange function, not for its store of value function down there. Despite the idea, it's just the volatility is too expensive. But nonetheless, like the Lightning network for remittance payments and for general transaction costs is quite a bit cheaper. In fact, federated Ecash transactions would probably be even cheaper than that too, which is interesting. But let's just say it's Lightning. So like that's valuable for people to be using. But then it comes down to, okay, well, we got the stability of the asset now, and people want dollars for kind of their store of value function because of that. So, maybe you could have stable coins get integrated into the system. That's certainly possible. What I think is also interesting is like Fedimint did a hackathon, and there's this idea of like stability pools. And, these kind of ideas existed in crypto in the last cycle, but it's like you pool liquidity together and you set up effectively what's like a derivative contract between two parties. And it settles based on a market price. So like all that means is like you can find stability by finding buyers and sellers in a market to agree to pay you a certain amount of Bitcoin based on a price. So like everybody pools their liquidity. I say, I want to have stability in my Bitcoin at 24,000. And I lock that price in for the next epoch. 10 minutes later. And at the end of that 10 minutes, if the price of Bitcoin rose to 26,000, then I pay the extra amount of Bitcoin to the guy on the other side who took the risk, and he didn't get stability. He increased his volatility. So like basically there's this idea that they could use the programmability of this system to create things like stability pools that could actually create stability within Bitcoin. You pay a fee for it, and that's a huge question. Like, this is a new idea. So like maybe it's way too expensive. Bitcoin's too volatile. People have to pay too much for stability. But when you look at the transaction costs and the interest rates that people are paying down in Africa, it's pretty high. So like maybe not. Like I don't know how expensive the market has to get for it to not make sense for people. So like if you have to pay 2% a year, 5% a year to like hold Bitcoin, use the Lightning Network, and keep it stable, like that's a completely fair trade-off. It's totally worth it. And I think that a lot of people would get on board with that. But I don't even think that's like the biggest idea. I think the biggest idea is that like people are always talking about microfinance in Africa. And it's like, okay, cool. Like Lightning Network can help with microfinance and small payments and stuff like that. But at the end of the day, Africa has a capital problem. They need people to be investing more money in Africa. So like what I think is interesting is that if we think about if we remove Bitcoin and everything from the picture and we think about this from like traditional markets, it's like a lot harder through those avenues. What I could see is that like if we did have something like what I'm talking about with like stability pools and this ecosystem built out down there, that creates this very seamless way for capital to start moving down to Africa. So like if some sort of, I don't know, envision a microfinance like yield product. And there's a bunch of people in the US who are like, oh, cool, I'll throw money into that pool. Like they're doing all these investments and maybe it totally blows up and doesn't work out. But I think it's interesting because like it could actually be like an interesting avenue to attract capital to things that had not existed before. And it could create a funnel of capital. So I think like that's kind of compelling. And when you pair that with this idea of like emerging capital markets native to this system, I think that's also a really, really big idea. And when we think about, everybody talks about, like store value and medium of exchange for Bitcoin. Unit of account's a huge deal. Why is the US dollar the global reserve? Unit of account. That's the most deeply entrenched form of monetary function you can have. Once you get set in as that, like you're good. So like if we start using things where that stability pool concept, that's just like, the initial application of it. But all it is it's contracts being set up to track an asset price and settling between people. You could track any publicly traded price with that. You could turn Bitcoin into a reserve for a bunch of any sort of publicly traded asset category. So like, that's pretty compelling. Like we could have like a lot more capital markets in Bitcoin to achieve like a reserve function. That's a really big deal. That could create a lot more scale in it. That could make it a lot less volatile. So like there's a ton of different things. These are all very long term. Yeah. But like that's kind of what I'm seeing is potential here. And it doesn't have to be people in mud huts. It doesn't have to be, a bunch of maybe it centralizes, right? And that's one of the key risks I see with Lightning. Is it's a state channel system. It requires a ton of liquidity. So when we have a benefit of scaled liquidity, Lightning has a natural incentive to centralize over time. And maybe it doesn't become too centralized, but Ecash doesn't. In fact, Ecash starts to work less as it scales. It makes more sense to keep those types of systems smaller at a federated level. Does it work at scale? Yeah. But like, I think that the Ecash systems, when we look at it from a systemic view, if we had a system of federations all over the world, it's still at a systemic level would maintain a pretty decentralized state to the degree that we would need to keep this permissionless like we would in a self-custodied world where everything's peer-to-peer. It would still kind of maintain that property. Whereas if everything starts going into like Lightning service providers in the long term and none of these other technologies emerge, it could get pretty centralized. Yeah. And like that's kind of scary to systemic level.
I don't know why Fedimint wouldn't also centralize because let's say we had our own little federation in here. And to then interact with other people, we need that market maker in the middle. Now, if there was a huge one run by like big companies, the fees for the market maker for them would presumably be much lower because of the added trust, as opposed to just some randoms who have a federation. Now, if you're then trying to like interact with other federations, that's going to cost more every time that I want to transact with, say, PubKey user. Like one of these big company federations, and I need to swap my Ecash out so I can interact with them. Every single transaction is going to cost me more because I'm in a smaller pool with less trust. Yeah. So does that not lead to more people just joining the pool that has more trust with these market makers because then every transaction in your entire life becomes a little bit cheaper?
Right. So I think you're just describing, would Lightning just be used instead? Or would you...
Or just one larger federation?
Yeah, which is there's certainly possible. Like there could definitely be like a very large federation that's utilized for that purpose. But I think at the end of the day, you still have like a scale. There's limitations to scaling on the custodial angle. So that is something that will probably remain small over time because of how trust is kind of like optimized within a smaller community level. If that makes sense.
It does. But so is there like a maximum size for a federation to be like? Is there an optimal size?
Oh, no. Well, I don't think there's like an optimal size, right? Like we're looking at a technology and applying it to different use cases, right? So like there could be an optimal size for your family. There could be an optimal size for your broader community. There could be an optimal size for a commercial like institution, like what you're talking about. There's like a lot of different ways that it could build out for different functions.
But then the smaller you are, the more it costs you to interact with other federations.
Yeah, so not necessarily. I mean, you could just say like, I want to use Ecash to privately transact intra federation. And if I'm interacting with other federations and I think it's too expensive, then I can just pay them with Lightning directly. I still have a Lightning wallet and I still have an Ecash wallet.
So it's going to come down to, it's a bit like right now, I have a multi-sig cold storage wallet. I have 2 single hardware wallets, which have got a small amount of Bitcoin for day-to-day stuff. One for the football club, one for what Bitcoin did. Actually, I've got a personal one as well. And then I also have like a couple of Lightning wallets, which are, like I've got a variety of things. It feels like I might also have some Ecash within like Fedimint, within some federation that I use for other transactions. So there's like the different bits that you start interacting with for different reasons.
Right. And the point is to have it like in a wallet technology to where this is automated enough. Because like the way that we're talking about it at a fundamental level, it seems like really complicated. But like if it's automated enough within a wallet, a good comparison is like, you know, your Bitcoin cold storage or in a multi-sig or whatever it is. That's something that would be like your long-term savings that you're putting a lot more effort into for like self-custody potentially, or maybe that's done through a community. But with like eCash, it's like, I mean, it's called cash for a reason. It like actually works. It's like on your phone. So it's working like you have like cash in your wallet and like you're probably not storing all of your money in cash. You're using that for day-to-day transactions when you're walking around or whatever it is, or you're paying your buddy or something. So like that's another way that you could think about it in terms of the comparison. Like you'll have different systems that you're using for optimizing. Maybe when you're paying on Lightning where you know it's going to somebody over in China who I'm going to have to go through a router, a Lightning gateway or something, maybe there is a high enough fee to where you care. In which case, maybe you're just using Lightning through your wallet to make those payments and you're not using Ecash.
So like the way Moon obfuscates like a lot of that complication away where this can be on-chain or Lightning, there'll just be an additional thing that is also obfuscated away. And you just kind of pick the cheapest way of paying every time.
Right. Like once again, this is all prospective, but yeah, I think that, that's definitely how it could work. Yeah.
Huh. Okay. I still don't entirely buy federations because like the other thing I'm thinking about is like, okay, say Eric, I'm like here, you know, we've had some beers. Oh fuck, by the way, I haven't actually paid for that food.
No, I paid for it.
Oh, did you?
Yeah.
Huh. So I owe you some Ecash.
Yeah.
So we're like, I want to pay Danny and I go to pay him. It's like he has a different Ecash.
Yeah. And that's where like the Lightning routing piece of it comes in. But that's all automated.
Yeah. I don't want to know any of this, right? I just want to go. So what if the federation he's part of issues 2-to-1 Ecash, because that's just the way they want to do it, whereas mine's 1-to-1 against Bitcoin.
So there's 2 incentives for that, right? Like there's the incentive of federation. This is just like a broader idea of like what's the incentive for fractional reserve banking. Like there is an incentive that, and this is something that I think could also be a vector that makes the system more attractive. Like what made crypto so attractive? Because they were able to create seniorage through token issuance, right? It's a similar concept. It's the exact same economic concept to like fractional reserve in a certain sense. Like you're creating a new monetization that you're able to leverage because it's costless for you to create. So like there could be, and this is why what I see as an incentive for like a potential for fractional reserve, there's an incentive like why would I want to join a federation and use their Ecash? Because I can get a cheap loan. Or because there's some sort of like rate of interest that's attractive to me about that. And like you could see economies start forming around that. The question is it sustainable?
Hold on, we're going into the world of free banking again.
Exactly.
But why did the world of like free banking led to central banking? Because of run on the banks, right?
Yep.
And so aren't we just recreating something that kind of broke?
Right. So like, and that's where I, kind of back to the last recording we did, it goes down into a lot of theory around like what regulates a free banking system. And when we think about these systems, we have precedent from like the 19th century. So that's something that was a very different system. It wasn't as competitive. Information wasn't as transparent. It was much easier for these things to be controlled. When you apply that theory to this digitally native system, the game's kind of changed quite a bit. Things are a lot more incentive. Information's much more transparent. We're using a base layer monetary asset that can be withdrawn into self-custody and traded peer-to-peer, at arm's length transactions. So like that changes the incentives of the whole game. The reason that these systems centralized in like free banking was typically because of government encroachment, where they use scapegoats like, fractional reserve banking destroyed this. You need us to help you so that we can do the exact same thing. And eventually we're going to turn it into fiat money, 20 years later. So like that whole scheme was more, it's a lot less possible to occur. Like Bitcoin being an immutable monetary base layer, it eliminates the possibility if Bitcoin monetizes that we would have fiat money again. And then the question is, if we have a banking system built out and it's like a free banking type system, will that be so centralized that, it ultimately destroys the system? Well, the market can determine that. As long as people can opt into peer-to-peer trading through whether it's like base chain or through Lightning, then it ultimately is something that will prevent that system from ever getting to the central bank level. But I don't think the technology could prevent it from getting to like a fractional reserve level yet. There's arguments. There's things like when you go into like what prevented it, you had like certain parties, like you had clearinghouses, which was the primary thing. And those emerged because competition in free banking was very high, and different banks would attack each other by buying up a bunch of their notes and redeeming them all at once and trying to put their competitors into insolvency and then acquiring the market share of their competitors. So like that was happening more frequently, like when a free banking system emerged. And then because of that, like we had clearinghouses step in that were kind of like netting the payments between all the free banks in the middle, and they were membership based. So you had to have a reputation to become a part of it, and you had to abide by certain practices. You couldn't do crazy shit and be a part of it. If you started doing that, you get kicked out of the membership of the clearinghouse. And that was a huge cost to you because clearinghouses were very helpful. They made it a lot more efficient. They would net payments between everybody. They would set interest rates. They would help. It was kind of like this. It was the private market solution that central banks were, ultimately used to say, no, government should control that cog in the wheel that like kept everything together. So like those were helpful and they're reputation and membership based. If we have a system that's very efficient, I see a lot of ways that like if we have a free banking system emerge, putting Fedimint aside, whatever the technology is, I see a lot of ways that we'll have certain functions that are very parallel to that. Like the proof of reserves topic, that's just like a reputation-based form of information transparency that people are trying to create. So like we'll probably have an institution that emerges that's similar to a clearinghouse or multiple institutions that are like standards. If we have a free banking system, they'll say, okay, if you want to be a part of this, then you could use, say this federation that has this stamp of approval from, whatever the proof of reserve company is or the clearinghouse type functions. We'll have these guys that are monitoring, they're tracking, they're like potentially auditing, they're requiring federations to like report Ecash issued. And that would probably be for things that are like higher scaled, that has like a large customer base where moral hazard is much like greater of a risk. So like that's one thing. But the primary thing that I think is really interesting, that could like make the system potentially very efficient to the point where we may not even see fractional reserve, is because, with things like the Lightning Network being able to create transaction throughput so rapidly at such a low cost, we have this like very efficient mechanism for trading. And I think that we'll probably see a class of like solvency speculators on the system. So the point about how competitors would try to put each other into bankruptcy, it'll be like a lot easier to put a fractional reserve institution into bankruptcy, because when we look at technologies like that emerged in DeFi of like flash loans, where it's like if there's a publicly traded pool of liquidity and we have a verifiable way of creating an arbitrage trade, then you could actually take out a loan that would instantaneously allow you to loan that entire liquidity pool. So what does that mean? We can create arbitrage trades with very high ability to leverage those trades, which means you could probably put a fractional reserve bank out of business really quickly and easily if you could scale the loan to a certain size. So like that would make fractional reserve just hard to run in a private market. And the reason that that would exist is because you could make a lot of money putting these things out of business and then shorting them. So like that is much more long-term, right? That assumes that there's an ability to short a bank that is a federation, has some sort of publicly traded token security, whatever it would be. But that's an example of something that I think like the system would just be very efficient in a digitally native way. People always have the ability to opt out into peer-to-peer self-custody if they want. So like that puts checks and balances on the system that just have never existed before. Like in old free banking systems, like what are you going to do? You're going to go carry your gold around and like, lug it. And like some people probably did do that.
Is it almost like a financial system singularity?
Ooh, that's ooh.
Do you understand what I'm trying to get to at that point? They're like,
There's the title.
That's kind of badass.
but you understand what I'm getting at with when I say that.
Right. We've reached a point of efficiency to where all of we've hit the singular. I don't want to say perfected, but we've optimized for it.
Because we have ultimate transparency, we have ultimate arbitrage, we have massive liquidity. So everything just becomes so efficient that any fuckery gets exposed or just gets traded out. So there's no because a lot of the fuckery that happens in the system is because it's kind of hidden.
Yep.
Like hidden, like let's look at what happened in 2008 financial crisis, right? That happened. One of the many reasons it happened. One of the large reasons was the AAA ratings of these essentially junk bonds.
Yep.
You wouldn't have this because everything is just transparent and open, and every arbitrage opportunity would close.
That's an interesting point. I mean, I don't want to go that far. It's still that I wouldn't call it the singularity. If we got a curve, we're getting up the curve, but
just much more efficient.
Much more efficient. It's just a lot more efficient. There's a lot more information transparency, be much more competitive, and the ability to exit the system exists. Like that's a key innovation of Bitcoin is the ability to exit our financial system basically means pull your money out in cash and try to operate in an online digital world with that. So now we have it.
The two things that are on my mind is what is the scenario where the little guy can get fucked? Mm-hmm. Where does that exist within this? How much do they technically have to understand? Like Nostra, I signed up, I liked it. People are like, oh, you need to put in your Lightning URL. I was like, what? How do I get mine? So I went into my Blue wallet. That isn't a Lightning URL. So you can only get one from, turns out, Wallet of Satoshi. It's only because I went to NVK. I said, look, explain to me this shit so I don't have to look it up. And he told me.
Yeah.
There's still lots of technical hurdles for people.
Totally.
I mean, Gandalf, who's pretty technical. Shout out Gandalf.
Yeah.
I'm not dumping on you here, but
you are.
Yeah, but he exposes private key. There's clear flaws in that.
Clear wizardry.
Totally. The consumer experience is so far off. And that's one of the things that I think is interesting is kind of going back to that point around why did Binance get so much adoption? We need a protocol that works on the back end that's creating a developer environment that's more seamless than going on Ethereum and learning Solana as a coding language in order to be able to implement this stuff. We need something that'll work for guys who know JavaScript around the world or whatever it is. So we need that happening. We also need business development that's building this shit out and creating a good consumer experience and kind of bridging the gap between this peer-to-peer protocol-based world that we see and then the practical reality of we need really good marketing and we need a really good consumer experience and we need to finance that pretty heavily to make it happen. So it's when you put if that all that gets combined in a certain way, we need to find we can create something a better example is Ethereum created this massive ecosystem of developers, and it's if we get that, then when I talk to businesses that are pitching a startup, they're always it's a bunch of developers, and then they'll say here's our business plan for how we're going to get user adoption, and it's okay, so we got to go out and we got to get boots on the ground and we got to do that. And that needs to be something that's scaled and centralized for a protocol entirely. Developers should just be I'm going to build on the App Store and then, people can go to the App Store and buy my app. They shouldn't be as worried about distribution and acquiring users. They should be more worried about building a really good app and then having that distribution and users already set up for them through some sort of protocol. That will solve a lot of problems and probably create a lot of efficiency in this. Because right now there's always Lightning applications that's just got a sponsorship here. We're going to set up a POS terminal and get a bunch of guys on the ground over here. And it's complicated. That needs to be centralized and pushed into a primary initiative to get that consumer UX and really push that out. It's a long-term prospect and it's going to require quite a bit of money. But if there's some sort of company that can really get a good global footprint that's sending applications to the world that are all aggregated within a single platform for them, like an app store in some form, that's probably where we really start to see streamlined consumer adoption.
I don't fully understand everything. And I think that's kind of a consistent experience for me in Bitcoin is that this is what you're talking about is because you natively understand this stuff.
Yeah.
And the point I'm trying to make really is that if you're trying to explain this financial system to your mom, my dad, they seem to be in a similar kind of position, but a lot of people, they're going to struggle with this idea. I think a better question therefore to you is like, what is the end goal? What, you said it's apolitical global money, but what is that as an experience for everyone? For all the plebs and peasants of the world? Like, what is the experience and what are the benefits going to be to them?
You have an application on your phone that's just as simple as like, anything else that you'd be using, like your social media apps and all that, except for on the back end of all of that is just decentralized financial infrastructure, Bitcoin, Lightning, maybe it's federations, maybe it's not. And then you also have, a primary group of developers that are all very native and understand this ecosystem, that are like constantly churning out updates and constantly like building that out. Like, I think one of the interesting things is like people argue against crypto because they're centralized, and I totally agree. It's because they try to act like they're not, and like that's a thing. But I honestly think that like this decentralization narrative really matters in certain areas. And like, there's a lot of areas where, like smart contracts probably don't need a global state for like most, if you think about how contracts work, they don't need that. They need a legal system. Like that's what makes a contract effective. Nobody wants like their contract being observable by everybody. It makes sense in like publicly traded markets for assets, but for like most other contract applications, it's like, I want my contract to be private. I don't want like all the details of it on the Ethereum blockchain. So like, I think a lot of these things are going to be optimized more around like actual companies and software companies that have that consumer efficiency, rather than trying to fix it and, bring out this development, try to eventually decentralize it. It's just like these things are always growing, always changing. You have to be pushing software updates. Trying to create a decentralized system for that just seems like way too costly, and you're never going to provide the consumer experience that they expect.
And how do you think regulation keeps up? Or do you think this actually leads to a less regulated world?
I think that if we get an apolitical form of global money, it's going to be probably a lot less regulated. I think it'll be because of the information transparency thing. That's key. It's just like consumers know what they want, and they know kind of what they're dealing with in a lot of different ways. Obviously, there's plenty of ways to manipulate that. Like your point about like the AAA ratings and the financial crisis, that could be a major risk that emerges in the system that I'm talking about reputation-based things. I mean, where there's money, there's power. People can get paid. It's not that I think that like free markets have plenty of problems. It's just it's a price that you pay for freedom. People get hurt. Things go wrong. There's still negative incentives, and there's always fringe markets where things go really bad. But the idea is that like, it's somewhat of a utilitarian argument of, is the greater good of everything else worth all of that? And it's a choice that people will make, and we want to provide the technology for people to be able to make that decision and be informed.
And reputation built on algorithms and transparency is going to be a lot better than reputation built on ratings coming from centralized bodies with an office on a street, who just don't do their job properly.
Right. Exactly. Yeah. Which is a great point. It's just like, if you could have, well, I guess I don't know. I haven't really thought this through much, but yeah, like the more that it would be software based and something that's, like I guess that's kind of an interesting application for like AI potentially, is because that's what AI is really good at. I don't even want to call it AI. I just think it's more like really efficient information aggregation.
Yeah.
And like that would be a great example of it. Like you could just have this AI running on your phone that's scraping web information every time you use an app. Like it just can naturally like produce information you ask it about something that you're using. That would be kind of interesting. I think that ideally, the ideal world is that Bitcoin doesn't have problems that require other networks to integrate with it to solve those problems. That's the ideal world. We realize that that's not the case, but Bitcoin solved the primary issue of not being able to create fiat money. So what's really important is that we get Bitcoin to a scale fast enough so that it ultimately isn't co-opted into a form of digital gold 2.0, which is very important because that's coming. And I think that needs to come in somewhat of the near term, which means I think a lot of these protocols, while they're probably not going to be perfect, some of these emerging protocols, I think can provide a viable path towards that in the amount of time that we would need that to occur. Because I don't think we can really still sit around and just wait for Bitcoin to monetize naturally. I still think that there's enough attack vectors to where it might end up, it could become like a digital gold. So like if we want it to be an apolitical monetary system, then we need to create enough paths and consumer experience and like have some sort of like organic, natural consumer adoption that builds over time rapidly, because there's protocols and applications on those that are enabling that growth rapidly enough. So like that's kind of the first thing, is that I think that it's like, ideally, I think a system of like Ecash with like, you know, this note on top of Bitcoin, and maybe it's not used, but ideally it's like, of course we wouldn't want that, but it's just like, this is probably like the right solution. We can sit around and wait for zero knowledge rollups and see if those eventually get there, and see if we can get Bitcoin through another soft fork to implement something like that. And then people can get the privacy that they want. I don't know how long that's going to be. I don't know if that's going to be in time. We do have a kind of like a solution that's optimized a bit. It's going to have trade-offs, but we do know that like in free banking systems, as long as you don't have governments encroach and the system's allowed to sift itself out, like these things, all private markets have edge markets of like fraud and abuse and manipulation. But as long as, you know, a large proportion, 80, 90% of the market is functioning based on a profit motive or something that is related to, you know, like the community model of like the best interest at a smaller scale, then, you know, that's something that I think can self-regulate enough to where those trade-offs probably wouldn't be too bad. And they probably will bring so many other benefits that could spur adoption. I think like the programmability piece will be really huge for that. And if we can have that move rapidly enough, and we can get enough developers and enough building, and we can actually build that out, get the consumer experience, distribute that enough throughout the world to where, you know, people have an application on their phone that's actually kind of doing everything that they want. And we find a way to get stability automized, going back to the stability pool idea. Like if these things can actually emerge within the next like 5 to 6 years, then that'll probably be quick enough to really make this happen. But that's probably what I'm most concerned about, is like, we got to move. And there's a lot of people working very hard to make that happen. But I think that there's going to be trade-offs along the way. And you know, everybody's free to choose exactly what they want, but you know, we need to make freedom money work.
Do you think he's working on a second book?
I mean, he seems like you've done the work.
Yeah. Is this a second book?
I don't even know if this is like a book, because it'll just end up being really wrong. Like,
So it's a paper. Maybe it's a Substack. Like,
yeah.
And I think the next one should be the transition from now to this future.
Yeah. So the only part of the bridge that I'm thinking about, it came up when we had Amanda Cavallera yesterday talking about, is that I think the bridge is essentially going to less and less fiat currencies. I just think we're going to see multiple currency failures, and people are going to start adopting, you know, we have the euro across Europe. I know that we don't have it in the UK. We have the pound, and we have, I think the yen survives for a certain period. And I think obviously the dollar survives the digital yuan, but I think there will be a battle of countries adopting the dollar versus the digital yuan. And I think we'll just have less and less sovereign currencies, because I think people will not trust their sovereign currency, and they will start adopting Bitcoin or dollar or dollar stable coins. And I feel like that is the transitionary period. Just that's what I think will happen.
Yeah, I kind of left that out in what I was just talking about. But yes, like the game theory is like the primary incentive that I think will keep things at bay. But at the end of the day, like if we do see some sort of crackdown globally, I guess a better way of saying is I'm not certain that the game theory is foolproof. Like, I think the game theory is the best argument. It's a strong argument. I'm very confident in it, but it's definitely not something I'm certain of. And the better we can make like consumer experience and wide global adoption move, like I think that kind of de-risks that environment pretty quickly. Because what happens when the U.S. shows up at your door with guns? And we got a lot of guns all over the world. Like there's and it doesn't even need to be guns. It could be digital warfare. It can be economic warfare. Like there's a lot of avenues in which they can bully the shit out of some of these countries. And I think that sometimes we're not practical enough about some of that. And like, you know, they can make a phone call tomorrow and bad things could happen to El Salvador. Yeah. Like that's something that people need to be mindful of. And, you know, they're probably going to try to make an example out of somebody too.
Isn't it wild we get to live through this period?
Yeah.
And kind of at the forefront of it in some ways, in that we get to have these conversations and that people are going to listen to them and care about what's happening. I think it's fucking wild.
Yeah. It's awesome, man. I've never felt more excited than when I jumped into all this. Like, it just every day is like, it's purposeful.
Yeah. Too much responsibility in these hands right now. I need to pass it on. Eric, man, honestly, really, really glad I've got to know you. Just value everything you're doing in your work, and I value you as a friend as well, mate. So, look, you're always welcome on the show. Nice watch, by the way.
I still got to give you that hug, man.
Oh, man.
You feeling better?
Yeah, well, yeah, maybe, but like, you know why. But yeah, we'll talk about that off once the mics are done. But listen, people, go and buy Bitcoin, the Seventh Property, Eric's incredible book. It's in the show notes, and go and follow Eric on Twitter, even though he's not tweeting much at the moment, and his Substack when he launches. Anything you want to pimp?
Nah, that's pretty much it. Yeah, I'll start tweeting again in a few months. I just been head down, but yeah, thanks for having me on, guys. Appreciate it.
Always welcome, dude.